In today's video, I'm going to be having a look at the non-farm payroll event for tonight and my expectations of it. And as well as that, I'm going to give you a quick recap of what's happened on the RBA monetary policy statement. Hello and welcome to another ACY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing I'm looking at today is unemployment claims. Now, we have seen a number of different unemployment claims figures over the last couple of weeks, in fact, for the most part of this year. So far, new filings have gone in at 1.186 million this week, which is the lowest number we've seen during the pandemic. Now, this is an interesting fact because even so, continuing claims are still at 16.1 million, indicating that the recovery is not going to plan. Now, because we've had that, there's 20 consecutive weeks that we've had filings above 1 million. So that is still a problem. And if you can see from the charts behind me what that number really looks like, and even though it is trending down, they're still remaining fabulously high. Now, to keep this in mind for our NFP results, we need to look at the next sort of things. Today is a very important day, especially for Congress, and NFP is going to be even more important or more speculated on than we usually see. Now, the stimulus packages have a deadline for today, self-imposed by Congress and, of course, Trump. But at this stage, we're seeing the Democrats and the Republicans still don't have a deal in place, and that the sort of consumer confidence of them actually getting to a deal is starting to slip. Now, Trump has also complicated the matter a little bit further, saying that he is planning on putting an executive order that will extend the current stimulus plan. So that's kind of counteractive to what Congress is trying to get to a deal on at the moment. Now, consumer confidence is slipping, layoffs are coming down, and we're seeing slower employment. So that is a little bit of a problem across the board there, isn't it? Looking at the non-farm payroll event for today, we've got jobless claims have been better. They're not all that good though. So because you've got jobless claims being better, it doesn't necessarily mean that we've got more jobs occurring. It might mean that some people are just not planning or going and claiming for their job money that they could. Now, the NFP forecast from analysts at the moment is 1.48 million for a rise, but the new lockdowns that we've seen in the last couple of weeks and the numbers across the board on consumer confidence, IMF data, and everything else in between suggest that this is probably going to be less. Now, looking at this from my thoughts, ISM employment has dropped. We've had reported increases of layoffs nearing the 500% mark, and we've also had ADP reports we saw on Wednesday reported drop. We've seen from there consumer confidence drop as well, and the University of Michigan has also announced a consumer confidence drop on their side. So overall, the really only thing that's holding this whole piece together is that we're getting consistently lower numbers when it comes to continual claims. So otherwise, you've got more pros than cons on this list than you usually would. Definitely something to consider about tonight when you're going to be trading NFP. Now, looking forward at the forecast for tonight, we've got non-farm employment change. The actual expectation is 1.53. Analysts are suggesting 1.48 million, and the unemployment rate is currently expected to be 10.5%, even though the actual figure right now is 11.1. So you could shake that magic 8 ball and wait and see what it says a little bit later on today. Now, looking at what's gone on with the monetary policy report we saw from the RBA today, I did say earlier in the week that this would be something to keep an eye on because we didn't know what their action was going to be considering the new Victorian lockdown. So right now, recovery forecasts have been reduced. They're expected to be slower than they initially said. We're now seeing 2020 GDP to likely contract 6%, possibly even more. And the overnight cash rate and yield curve control is here to stay until we see the targets of inflation and employment met. Now, they've said there's no case for FX intervention at the moment, so don't expect to see too much stimulus going directly into the FX markets or any caps on that front. Now, that's really all we have for today. I am going to give you a good bit of an idea on what news we have as well. We have the Chinese trade balance and particularly US denominated trade balance occurring. They are both tentative outcomes today, so there's no specified time. They could be anything that goes on. I've already seen the dollar CNY have a bit of an influx today a little while ago, so expect to see some of that action throughout the day unless you're monitoring it very closely. We've also got Canadian unemployment and, of course, the big one, US non-farm payroll and the US unemployment rate. So if there's anything from today's video you want to get in contact with me about, I've obviously got all my socials, but of course you can always email me at talktoal@acy.com. And of course, don't forget to like and subscribe to this video so you can get more great content from me and ACY Securities in the future. Have a great trading day ahead.